really want can take some time. You gotta be focused now, no play around, and trust the process to keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it, and if you do it, just shout it loud and clear. I wanna know if you really need it, and if you do it, just shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear. And there ain't no stopping now. You're the one. Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process to keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it, and if you do it, just shout it loud and clear. I wanna know if you really need it, and if you do it, just shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear.
Hi, everybody. Good evening. Good evening. All right, everybody. Good evening, and welcome to another edition of DayTradeSPY.com's weekly fireside. Let's start the show right now. And good evening again. Welcome to DayTradeSPY.com's weekly fireside chat, introduction to trading weekend review for Sunday, June the 9th, 2024. And I'm going to go solo here. My name is Hugh. All right. Aaron's got the night off here tonight. All right. Giving him the night off. So anyway, if you are new to options, please let me know in the questions box. You'll find a little questions box icon on your Zoom dashboard. Click on that. I am the only one that sees that, so we'll go ahead and say whatever you want. I'll certainly try and get to all your questions here. All right. You'll find, again, you'll find a little Zoom questions box icon on your Zoom dashboard. So click on that. And I see people are already signing in. Sounds good. Okay, just looking at all the, my goodness, all the questions here. Okay. All right, so let's get started here. If you're new to options, let me know here. By attending this webinar, you'll fully understand and accept the financial risks involved in trading securities. The risk of loss can be substantial. You should carefully consider whether such trading is suitable for you in light of your personal investment objectives and financial resources. By accessing this webinar, you understand that you're not receiving any advice as to what or when to buy or sell, but are simply receiving information for educational purposes only. Any decisions concerning a trade are solely your own to meet your personal objectives and risk tolerances. You're alone responsible for all your own trading, and past performance does not guarantee future results. Charts are courtesy of I was going to say TD Ameritrade, Schwab, Thinkorswim, and Tasty Trades. So, all right, let's get started. So here I am, live, living color. Actually, you know what? I think that the lighting is a little poor. If I'm going to try something, I'm going to just close the blinds in the back here so I don't get so much background light, and maybe there'll be more light shed on my face. And then you can see me easier. That's a little bit better. So there we go. Yeah, you don't get to see the flowers. Okay, that's okay. Maybe we can keep the flowers. Let's see if we can see the flowers. Hang on. All right. Let's see. Let's bring this back up again. Okay, you can see some flowers there. All right. Okay. Anyway, listen, my name is Hugh. Most of my experience came from the trenches. All right. I learned to trade many years ago, but it wasn't until 2010 when I was coerced. They twisted my arm. They said, you got to teach us what you're doing. You're making money. What are you doing? Did you win a lottery? Suddenly you're making some money. How are you doing it? Where are you getting all this stuff from? lots of vacations, new cars, new house, new airplane. I said, well, I'm day trading SPY options. Well, you got to show us. So I started things with the inner circle. I was in 2010 in the trading room, and we designed some courses along the way, some webinars, ebooks, all kinds of different things. And um, yeah, mostly School of Hard Knocks. In fact, I teach what I trade, and I trade what I teach. And um, and it's been going great. I mean, it's just awesome to see so many people doing well. And I teach actually a lot of stuff that you're not going to find anywhere else. We take you out of that theoretical world and into the real world, okay? In the real world trading. And I've taken a lot of courses, probably saw so many people in some of these courses back then, and um, I found there were a lot of good theories involved, but we certainly take a practical application to it. So anyway, been teaching thousands of people around the world since 2010, now we're in our 15th year. I'm looking for short-term breakouts with small daily gains. That's kind of my specialty on that, okay? And I combine fundamentals with technicals and the psychology of trading, get that all in there. They say I'm better looking than Aaron, but he's the smart one. So my partner in crime, his name is Aaron, and he's got the night off tonight, but he opened his first trading account at the age of 17 back in high school. So when all his friends were out there doing other things and sports and playing and different things that he'd be out there in the library and just studying charts and companies and different things like that. So he got into that technical analysis in a very big way, and he's found some indicators that were really, really effective. And he's able to combine them in a certain way that's it's extremely effective in what he does. So we were able to snag him from a $150 million commodity fund that he was working at before. So what happened was Day Trade Spy was on its own for a long time, and then Eagle Financial Publications bought us out, and they brought in Aaron. So I've got my set of indicators, and Aaron's got his set of indicators, and we have a saying that when our indicators unite, our trades ignite, which is really pretty cool because if Aaron, with his high probability trade, says the market's going to go up, and I'm looking at my indicators and I say, you know what, I think the market's going to go up, you're pretty assured that the market's going to go up. You might want to buy call options. Anyway, he identifies high probability trades, and together we've been doing extremely well with the trading room and other things here with Day Trade Spies. So just want to tell you that. All right, couple announcement here real quick. Just want to mention this every week. If you're not a subscriber to Spy on the Market, you might want to be. Okay, no, it might want to be because this is what we do. It's a free newsletter. It's an e-newsletter, goes into your inbox every Thursday morning. Just a brief 3-minute read, light, relevant, entertaining. All you have to do is go to the website, daytradespy.com. And up comes the pop-up. Just leave your name and email address. That will automatically get you on to Spy on the Market. Like I say, just a couple of minutes to read this thing, but it's actually very interesting and even entertaining. This week's topic is no need to diversify with SPY. No need to diversify with SPY. And this here is the pop-up I'm talking about. So either get on this or over to the right where the daily payout plan, I believe, that will also get you on. So just leave your email there. That'll also not only get you your tips, tricks, and traps from the trenches, but also get you on the email list for the Spy on the Market, released every Thursday morning. Okay. Tonight's agenda, folks, going to review last week, preview next week, do some Q&A, and well, we're not going to talk about the ultimate trading shot. We're going to talk about the trading room instead. Okay, let me get that straightened out. Okay, sorry. All right, preview of last week. Sorry, review of last week, preview of next week. Do a Q&A session, and then we're going to do the trading room. Okay, let's get started, folks. Here is a review of last week. This is what happened last week. Well, we had some PMI reports, manufacturing PMI reports from S&P Global, and also the other PMI report. Anyway, says that I can't remember the name now. This is terrible here. I will find out for you what it is. I just got to been had a very had okay, I gotta tell you something, all right? Almost didn't get to this webinar here tonight. I mean, I was going to, but it was tough. My dog Lucy, she found her way. We have a hill, a pretty big hill full of bushes and stuff. It's quite a drop next to our house, and it started raining, and she was outside. And what happened was, by the time I got her, couldn't find her. She had worked her way through the bushes and slid halfway down the hill. I ended up getting a couple people to help, but it turned out we ended up having to get the fire department over to, to help get her down. It was just that bad. And I felt really bad about that. And so we're scrambling here, and it was about 15 minutes before showtime when we finally got her in. So it was a pretty tough go here. So so we sort of missed a few maybe a few slides here and there, but I think we're gonna be okay with it. We're gonna be fine. We've got we've got everything together now. So and I am looking here at S&P Global, and the other one is I was gonna say the conference board. It's not the conference board. It's gonna drive me crazy if I don't find out. So I'm gonna find out right now, and just bear with me. Where's it here? Monday. We had ISM, Institute for Supply Management. That's it. Thank you very much for that. Okay. Okay. Anyway, they reported hotter than forecast numbers, and it tanked the SPY stock 6 points. But we hit a support level right here around 524, and it inspired buyers to come back in, and through a very strong, excuse me, support level that Aaron actually identified, the market came right back to within, I want to say a few cents, probably about 50 cents of where it opened up. So we did recover much of that loss. And I like it when that happens because you can usually make a lot of money when on the way back up when I see the strength going back up. But that's what happened on Monday. Tuesday is a little bit different. We had lower than expected job openings and labor turnover survey, better known as JOLTS. Okay. That report came in after the initial drops. SPY did move higher and ran up here in pre-market. And then on Wednesday, we had a services, so an S&P Global Services and Institute for Supply Management Services PMI report. They came as expected or slightly higher. All right, so initially we got a bit of a pullback, but then the market went up likely based on the fact that the European Central Bank and the Bank of Canada, they're the first banks to cut their interest rates. And sort of a prelude, I guess you would call it, to what possibly might happen with the Fed Reserve. The Feds are looking at those, all right, and they're saying, okay, so it looks like worldwide, they're leaning on cutting interest rates, and that certainly was an inspiration for the stock market to cut interest rates. SPY then, of course, jumped and turned on to a strong breakout of 530, right up to 530 resistance. Broke out of 530 and ran right up here to about 534, actually even higher. And then on Thursday, we had some higher than forecast unemployment claims with profit taking. Well, that collapsed SPY, but quickly regained momentum back to the close near the open after a wildly swinging day that we had right here. I know sometimes these charts don't really show it, but when you look at the what happened here on the 5-minute charts, what I'm showing you here is an hourly chart, but in the 5-minute chart, this thing was swinging like crazy. And if that wasn't enough, on Friday, we had conflicting employment news with the average hourly earnings, non-farm employment change, and unemployment rate combined with Fibonacci retracements led SPY to a 5.5-point range and a record to a new all-time high up to 536.89. It's just crazy. Friday was a crazy day. All right, and that's kind of what happened on that. So, what moved the market? Here's a seasonal chart. Take a look at this. Last week, SPY rose about 3 points in the week, but seasonally, when we look at the week coming up, seasonally, SPY drops about 9 points the following week. So it could be a crazy week coming up here. We're going to see what happens. So what happened here this week? Stocks hit a record high on signs that the economy, labor market, and the central bank policy are normalizing. We got a gentle economic slowdown, alleviates upward pressure on inflation for a soft landing, and the labor market shows softer hiring ahead, but not a major uptick in firing. So things are leveling off. They're starting to get back to normal. And again, the European Central Bank and the Bank of Canada kicked off their rate cutting cycles. And hopefully, if that is any inspiration to the Feds cutting their interest rates, then we might see a little of that coming, maybe hopefully sooner than expected. They have been not any, they have not shown any signs that they're going to do that anytime soon, but it looks like we're certainly on the right track with that. More sectors, regions, and asset classes showing signs to the upside for more balanced portfolio gains ahead. This last week was not too bad at all. Here's a chart of growth. Growth is slowing towards the economy's longer-term potential rate. You can see the estimates instead of those really high numbers. They are showing numbers in the 1.6 to 2.2 range for the coming quarters. So we're going to see what happens. This is, of course, courtesy of Bloomberg and Edward Jones. But we're certainly on the right track. And if this growth continues, we may see some cutting of interest rates to invigorate the market. All right, to try and spark it back up. So, but it's probably going to be a slow go, not as aggressive as we first thought several months ago. SPY did gain 1.3% this week up to year to date 12.1. Nasdaq is up at 14.1 year to date, and the Dow is up only 2.9% year to date. But we are heading in the right direction. Coming up in the week ahead, we have no news day on Monday and Tuesday. But on Wednesday, you got some CPI reports, and the Fed funds rate is coming out along with the press conference. Now, the futures have baked in a 0% chance of a rate cut for this month. I don't expect anything to change there. In fact, I expect it to stay the same, but might be surprised. Never know. Might be surprised. Thursday got a PPI reports, producer price index reports, unemployment claims, and Treasury Secretary Yellen will be speaking. And on Friday, we have consumer sentiment and inflation expectation reports from the University of Michigan. So what does all this mean? Well, we have volatility that could be low on Monday and Tuesday, elevated on Wednesday and Thursday, and down to moderate on Friday. I always advise people trade small, trade often. Expect moderate gains, and don't get too crazy, especially on Monday and Tuesday. Probably just sort of range-bound trading. Maybe a little bit to the upside, but don't expect too much. On Wednesday and Thursday, we're going to see some probably wilder swings on Wednesday and Thursday with the reports that are coming out, and into Friday as well. All right. So let's get ahead here to our 2-minute tutorial. Here's the question: how do I fix my pivot points to be the same on both my sim and my real charts, or does it even matter? Well, the answer is yes, it does matter, and it's easy to do. Just remove those outlier trades that spike out of that normal range, and they should be in sync. Let me see if I can show you an example here. So if I cut this out and bring in the, let me bring this up to you here, time frame. Okay, I think I'm going to do this. Get to the 3 charts instead. 3 charts, show you the 3 charts. Okay. All right, I'm going to expand this here. So let's take a look here. I don't know if I'm going to be able to show you. Okay, so what we're talking about here is pivot points. Well, they have them right here. Okay, so that purple broken line is the pivot point right there. Actually, what I want to do is I want to remove all of the studies here. Just have the relevant ones on, okay? And get rid of this one as well. And apply, okay. Same with, actually, I'm going to just, okay, I'm going to take this one out as well. The studies here on the 1-minute chart, and get rid of these guys as well. Apply, and I'm going to move this guy over here. Okay, there we go. All right, so when you have the pivot, okay, so what I'm showing you is the sim account. I'm not allowed to show you the real account because FINRA rules. But sometimes what I'm saying here is sometimes you're going to get a pivot point. This one here is showing us the pivots at 533.76 right here. Okay, and of course, By definition, it's also going to affect the pivot, support, and resistance numbers. That red broken line is actually the pivot resistance number. For the sake of this discussion, I'm going to remove it so it doesn't confuse anybody. Okay, and this is it here, right here, pivot point. I'm going to remove the R1. That's actually R1. There we go. Okay, just trying to stay with it. So the real pivot point is this. The support and resistance lines are derivatives off the pivot point. But sometimes on your real charts, you're going to see a number that's different than what is showing you on the sim account. So what you have to do is go out over the last day or whatever, and look for those outlier trades. Unfortunately, again, I can't show you, but you're going to see maybe a trade that, a number that's way out of whack, a line that might have, you might see maybe this green line go way up here or something like that, right? So what you want to do is, and I'm just going to make this color gray, something like this here. So maybe you'll see something like this, a line that goes way out on your sim account that you don't see on your real account. So what you want to do is you want to remove that because the pivot point is actually the average of yesterday's high, low, and close. Okay, the average of yesterday's high, low, and close. So if on your real charts you're not seeing an outlier trade that the data feed might have picked up on your sim account, you have to remove that. You have to remove that candle right off the chart. So to remove that candle, you're going to simply put your cursor on the chart. Of course, I'm just kind of showing you an outlier trade here. And of course, this is the thing. I'm going to bring it back here to kind of show you. Come on, baby. Okay. Obviously, I'm trying to actually, I can do it like this. Hang on, I got an idea here. I'm going to remove that. I'm going to make this candle much, much higher. I'm going to make this candle much, much higher. I'm going to make this here, say 537 or something, okay? I'm going to apply. So this candle here, if you're seeing this candle here on your sim account, but not on your regular account, your money account, then that's going to skew your line close. Okay, that's going to skew your pivot points, right? It's going to skew your pivot points. All right, so note this key pivot point right here. It's at 533.76. 533.76. Not sure that would be applicable, but the thing is, the way to do that is simply look at those outlier trades that are really high or really low, that's skewing the pivot points, and just right-click on it, hit correct this bar. This is on Thinkorswim, and you're going to get this screen here. Click on remove this bar, then close, and then that bar is now gone. And if you get rid of all those outlier trades, your pivot points should be in line with each other. Okay. Now, and that should do the trick. But yes, you do want your pivot points to be accurate and consistent with each other. All right. So I think that's really important. So I hope that made some sense. Anyway, let's move on, folks. It is 8:22. I do want to get to some questions here tonight and kind of finish up hopefully a little bit earlier than an hour and a half type of thing. So, but anyway, we provide opportunities every day. I'm sorry I didn't have a chance to get my own trades in here to show you, but I did some trades on Friday that worked out very well. But we provide opportunities. Actually, the market, not us. The market provides opportunities every day to make some serious money on the market, and we show you how to spot them and how to trade them. That's what we do. That's what we do in the trading room. All right. And the trading room, and I want to tell you about the trading room. I haven't talked about it in a couple of weeks, and actually get some really exciting things going on. But in the meantime, I'm not allowed to tell you about what's going on. But I understand they're supposed to have taken the ultimate training course off. I don't think it's available anymore. And so right now, I'm going to talk about the trading room. We are now in our 15th year. I think it's the longest running trading room that I know of, continuous running trading room. There's a reason for that. It's because what we do works. And we've been trading people around the world for many, many years. The trading room is hosted by yours truly, myself, and Aaron, as I mentioned earlier. He's got the night off, but he's going to be on. He's on every morning with me, okay, as a rule. Sometimes we give them the day off. But anyway, two professional expert traders. I don't mind blowing my horn on that because I think you should know that we know what we're talking about. We've been doing this a long time. We've gone through, I think we've gone through pretty much whatever the market can throw at us. And and I'm not saying it's perfect. Every now and then we do get caught up in a whirlwind kind of a horrible trade or something. But as a rule, we kind of know what we're talking about. All right. So it's good to align yourself with somebody who knows what they're talking about and somebody who can actually teach you in sort of a simplified, as much as a simplified way as possible. So when our strategies, this is where our strategies come alive. We've got several strategies. We've got the OMG strategy, which is short for out of the morning gate. All right. Basically, we're looking at a support and resistance at open going back just a short period of time, half an hour to an hour, something like that on the 5-minute chart. And the first breakout on that 5-minute chart, that is the direction that we're going to go, looking for a 6% profit target. Okay. Now that is a trade that we've been doing for a long time, so it's working very, very well for the most part. Every now and then it does give you a little bit of a challenge, but it's been working pretty well for the most part. We've got the scalp trade. The scalp trade is my favorite. We're shooting for a little bit of a profit, just a few cents profit, but I generally go in for much more money. So if I normally would buy, say, 10 contracts on a normal trade, like an OMG trade, I might go with 30 or 40 or 50 contracts on a scalp trade. But rather than go for, say, 5 or 6 or 7%, I might just go for 5, 6, or 7 cents. Big difference. And we generally get filled very quickly on those trades. So making a lot of money in a short period of time with a huge investment. Okay. I think that's really important. We also have this thing called our bread and butter strategy. And you're going to want to know about this. As a matter of fact, this is a strategy that you can invoke several times a day based on a certain setup that we watch. We don't really talk about it that much in the trading room, but we actually use it a lot. I guess it's almost a subconscious thing with me now. When I scan the markets and the charts, I look for these bread and butter strategies. It's kind of that strategy that you can use every day and just make 5, 6, 7% on the setup, and it's actually really pretty cool. And we're going to be talking about that. As a matter of fact, I don't mind telling you, but I know I'm not supposed to talk about it much yet because we don't have the particulars ironed out yet. But we're gonna have a workshop on the bread and butter strategy. All right, so I'm telling you now first, watch your email because we are going to have a workshop on the bread and butter strategy. Can't give you much details on that yet, but when it comes out, when you get the email, you better jump on this one. This is what's going to take your trading to the next level. And this is that this is that last strategy that people will find. All right. Um, when I say that, I'm talking about how I remember when I started trading, and I would go to all these various courses all over the place, and everybody had some of the different strategies, right? Different things they would be looking at, and I found they worked until they didn't, and most often they really didn't. They didn't work well for me. Let's put it that way. Until I developed my own system that seems to work very, very well. Very well. I look for that particular setup. I get in, make my trades, make 5, 6, 7%, and then I wait for the next setup, get in, do it again, do it again, do it again. Sometimes I'll do 2 or 3 of those a day in the morning, and I'm done. I like to be done by noon. I'm pretty sure that you can still do it in the afternoon, but I advise against trading in the afternoon simply because you get a bad trade. That 4 o'clock bell comes up real fast. So, but the bread and butter strategy. Anyway, this is where our strategies come alive, and of course, our scalping strategy, we do that as well, and different things. So, folks, learn and earn from the best. I don't mind telling you this. Aaron and I have been doing this a very long time. This is an interactive session in the trading room. You can interact with us through the questions box. Aaron and I are the only ones who see them, so we get to get in there, and we like to ring the bell for any winners that present themselves, It's exciting trading. It's actually exciting. I look forward to these trading room sessions every single day. As a matter of fact, I look forward to them more now than ever before. Have you ever had a job that after 15 years, you're still excited as ever to go to work? Well, I am. And that's why, because when you get good at this, it's exciting to beat the market at its own game. And this is what we do. We love to teach you. We love to teach. We teach what we trade what we teach. We don't actually have to teach this anymore. We sometimes talk about this. Just sometimes say, maybe we should just not bother teaching anymore. Just trade a little bit. But frankly, Aaron and I get a real charge out of seeing the success of other people. I know it's hard to explain that, and you probably don't understand it, but uh, maybe you do understand it. As perhaps if there are any teachers or trainers of anything in this group, you may understand what I'm talking about. There's a certain sense of satisfaction you get from transferring information, usable information from one person to another. And when we do this, we get a real thrill, a real charge, an excitement, an adrenaline rush when we get these reports back saying, "You changed my life. You changed my life. You changed the life of my not just me, but my whole family, and I'm able to help others. I'm able to make money and buy the things that I want to do and be able to donate to charities that I want or whatever it is. I'm not looking to do that, but whatever you want to do. I had a guy a while back, he was looking for a new boat. I guess a couple of years ago. I haven't talked to this guy in a while, but his objective was to buy a certain sailboat he had his eyes on. Apparently, this thing was going to be pretty expensive. Well, he got the money. He had a goal and he worked toward the goal. And when he hit the goal, he had the money and he went out and bought his sailboat. He was so excited, so happy. I have a comment right here from Mike. Mike G says, near perfect week. Until what? All right. Okay. Anyway, I'm gonna get into the questions a little bit later on here. So, but anyway, we'll get into the questions a little bit. But we've got all kinds of people saying how well they do. And I'm going to try and get to all these questions now. If you wrote an essay, it might be hard to read the answer. Okay, you got to do quick questions here. So I'm going to try and read all these comments here. So if I don't get to all of your questions, um, some people have some excellent fortunes. Anyway, I'll get to the question a little bit here. Listen, you can watch us during the trading room, right? You watch us make real trades on real setups using real money. We also use sim accounts, right? But this is where it happens, folks. This is where it happens. And if you have any questions, you get them answered in real time. Again, it's the longest running trading room since 2010. I think you're gonna really want this. Now, if you know what puts and calls are, this is where you should be. Okay, this is where you should be. Um, I don't know what the price that they're charging this. I believe it's still $6.99 um, for a quarter in the trading room. I'm going to just pull it up right now. I know sometimes they have different pricing on the website that they do than if you were to phone them. And I don't have. Okay, where is it here? Let me just do something here. Okay, it was a daytradespy.com. Right here it is right here. Okay, I see the I think this is going to be, if it hasn't come off yet, I'm shocked that it wouldn't come off. Okay, what is it here? Ha, ha, ha. Acceptance into the ultimate train is now closed. Be on the lookout for future emails about the next ultimate training workshop. If you have purchased the ultimate training shop, you can still access the records on the website. Log in to the website, review the materials. Recordings will be taken off the website July 31st. Please make sure you review all the recordings prior to that date. Okay. If you have any questions, call them. Here's the phone number 570-567-0426. All right, so that is done. Now, let me go to the trading room. Subscribe now. And I'm going to scroll down to see what they are looking to charge for this. Best deal, $39.90. Okay. You can get the whole year. for $39.90. But if you phone them, folks, give them a call or email customer service at DayTradeSPY. Very important. Email customer service at DayTradeSPY or phone them at this number 570. You can get the number off the website here, 570-567-0426, and ask about any special deals they might have, okay, with the trading room. And I believe they'll probably tell you, yes, you can get it for $6.99 for 3 months. Okay. If you try that, I'm pretty confident you're going to get it for $6.99 for 3 months, which is a steal. And the other thing is this. If you don't like it, I believe you have 30 days to cancel and get a refund. Can't beat that. You cannot beat that. Okay. All right, let's get into some questions here tonight because I don't want to miss out on that. Sometimes I don't get to the question until a little bit later on. All right, so gonna give me a couple seconds here to read some of these questions because I know that some people wrote me a big long list of questions here, and I know that trying to get to them all here. Okay, okay. All right, was up 30% through Thursday. All trades done before noon. Then Friday surprised and stopped out at nearly 40%. Tough to double investment in 4 weeks when things play like that. How often does this happen? Okay, so you get these swings, wild swings every now and then. Not sure, of course, when that happens. If I knew when that was going to happen, we can prepare for it. But every now and then, you're just going to simply get, uh, trades that are going to. That's not what I want there. That's what I want there. Okay, I keep flipping over the wrong slide. Sorry about that. Um, how often does this happen when you get these surprise outlier kind of trades? No telling when it happens. I mean, the market is the market, and nobody walking the face of the earth knows where the market is going to be. Okay. Unless you are the market maker, in which case you can anticipate what the market's going to do if you say or do certain things. The issue is right now we have a lot of economic news that is coming out. Some of it is actually contradictory, okay, in terms of inflation is concerned. Some of it used to be bad news on the economy is good news for the stock market, and good news on the economy is bad news for the stock market, simply because of the reflection of interest rates. But we're seeing a lot of how should I say it? The news that's coming out seems to be an improvement, a gentle improvement on the economy. We're not getting any wild swings. If we got a wild swing to the upside on the economy, certainly we'll get a maybe even a rise in the interest rates. As a matter of fact, a couple of weeks ago, there's some chatter about, well, the markets are going up pretty, or the not the markets, but the economy was moving along pretty nicely here to the upside, and maybe we should increase interest rates a little more. Not a good thing. But fortunately, they held interest rates the way they were. I think that was probably a month ago now. So they're talking about, of course, keeping interest rates the way they are, soft landing. Work is pretty strong. The labor market is settled in nicely. It's things are looking pretty good. So we don't know when this whole bad news is good news is bad news is going to turn around, and that good news is going to be good news on the market, bad news is going to be bad news on the market. It's all a function of interest rates, and that's really what it's all about. So I think the idea here is what we've been doing lately is implementing a 40% stop loss. So if the stock certainly does go against you, this is more for the new people. Personally, I don't like to use stop losses, and I actually don't use them. I know it sounds crazy. You're not practicing what you're preaching, but we've been sort of pressured into saying, well, listen, you have to have some sort of an exit. And people would say sometimes, well, if after the trading room, how come you don't tell us what you're going to do? So now we tell them, everybody in the trading room, say, okay, here's what my plan is. As a matter of fact, on Friday we had a 20% stop loss. We identified what could happen here. We said if the stock turns against us, we're going to go out with a 20% stop. All right, not a 40. So we've been kind of doing that lately, but we actually have to have an exit. So we've been saying to people, look, just use a 40%. I don't think I'm not sure. Maybe in the last couple of weeks, it might have hit it once or something, but it generally doesn't happen. And usually you will, with a little bit of patience, you're going to get your profit target on that. So, question here: have you dropped plans for the challenge trade, the 2 to 10K challenge? No, we have not. Who did that? Suresh, I believe it was Suresh. Thank you for that comment, Suresh. We're going to be doing the 2 to 10K challenge again. I'm not sure, probably in a couple of months, maybe not even that long. We're going to start it back up again. The first 2 times it worked like a dream. We took $2 to $10,000 in 3 months or less. The third time was very much a challenge. It lived up to its name and got just a little bit too distracted with various things that were plays, and we actually lost. I think we ended up in oh gosh, the loss of what, about $1,500 if I recall. So and I got aggressive near the end, and it just kind of backfired. It didn't work out very well. So that was that. So all right, just trying to work out some of these. Just give me a second here to read some of these things real quick. Just kind of scanning these comments here. Okay. Okay, somebody's talking about here. Got into some paper trading. Did very well. For paper trades, screwed up on June the 3rd and 4th. June trades, even though it worked out by inadvertently trading calls instead of puts as you directed. So I failed to notice the P in the symbol. Um, Looked out, made $697 after commissions, and then 3 and 30. Okay, okay. Anyway, it just goes on and on. Okay, somebody's just reporting in excuse me, what they did there. Foolishly got back in. Not put a stop on it. Made $1,988. Congratulations on that. From May the 31st through June the 6th. So in 1 week, that's very good. But ended up losing the full amount on the second go around of that 530 put and wiping out the week's gains. Oh my gosh. You got to be careful. So here's what happened. So this person, what's his name here? Don R. Thank you for joining us here today, Don. So what I'm gathering from your trades is I don't know. I haven't analyzed it. I didn't get your spreadsheet. I don't know your trading log or anything. But you can never be too careful. Don't get in. So the way I look at it is this: if I have a target profit that I want to make on a particular day, once I hit that target, it could be $500 or $1,000 or $200 or whatever it is, and it could change every day. It doesn't have to be the same every day. So let's say it's kind of going to be a quiet day today, low impact news, low volatility. I might be happy with $200 or $300 a day. If I make that target, I stop trading. I stop trading because the more I trade, and I notice this happens later in the day, after mid-morning into the afternoon, those gains are just not there as quickly as they are first thing in the morning. And it's harder to get. And one thing you don't want to do is end up being in a bad trade in the afternoon. That 4 o'clock bell comes up real fast. And if you're stuck in a trade overnight, it's going to really mess you up all day. You're going to have a sleepless night. You're going to worry about it the next day. If it opens up against you, now you got that to deal with. If it opens up in your favor, doesn't mean you're going to get your profit because you can lose some on theta loss or volatility or something. Just I like to get in, make a little bit of money, and get out again. But when I make my day's profit, so I tell people, look, it's okay to lose on a trade, all right, on a particular trade, but don't lose during the day. Try not to lose for the day. If you have a couple losses in the day, small losses during the day, it's just not happening. Then stop trading that day. There's something going on. Maybe the market is just acting a little bit weird that day. There's something going on. You might not even know what it is. Don't forget, we have a lot of sort of high impact things working on the market. It's not just interest rates, but we've got the war in Ukraine, and we have the war in Israel. That's all coming to a head. We've got a former president that was charged and indicted and found guilty, and it could be the future president. And then the next week we've got our current president's son in court over. Well, you've been reading that stuff. Ooh, I don't think you can even make a movie out of that one, but that'll be interesting to see. Uh, what would they call the movie? The infamous laptop, or let me see. We can come with some really good names. It's a good thing my daddy is the president. Or, bless me, Father, for I have sinned. Oh my gosh. It's just coming out of the woodwork here. Uh, oh, sorry, guys. Sorry. I don't mean to get political, but uh, anyway, I'm sure I'll pay for that somewhere down the road. Anyway, folks, we have a lot of things working against the market, right? CPI reports, PPI reports, PCE reports, CP, whatever these numbers are, and we got unemployment claims, we got employment numbers that are conflicting. So here's the question: how did how did it work? We had the numbers the other day, if I remember correctly, we have more people working, but unemployment became higher, or the unemployment rate got higher or something. So the unemployment rate is a function of how many people are in the job market. So you can still have more people working, but also a higher unemployment rate if more of the masses enter the workforce once again. Don't forget, we just left COVID with so many people not looking for work. They don't want to work. They're on the dole. They're getting money from wherever. They're using their savings account. But of course, their savings have now been depleted, they have to get back into the workforce. So if you have a greater number of people in the workforce, but not able to find the work that they want, that's going to shoot your unemployment number up. So it's just a matter of how they figure it out. But anyway, so a lot of conflicting kind of numbers, and we're trying to anticipate numbers. That's what we also look at, not just fundamentals, but also technicals. We get into Aaron's deep dive analysis, and we also look at the psychology of trading. There's a lot of mental issues at play here with trading. Okay, so anyway, moving along here. Okay, okay, sign up for the ultimate training lessons. Good stuff. In the investment planning session, you showed a spreadsheet showing how to increase account in 9 months and take money out. Can I get a copy of that spreadsheet? Didn't see it available on the DTS website. Mike, looking for the spreadsheet. Let me see if I can get this to you here. Mike, let me get your name. Okay, spreadsheet. Okay, I will send that to you, Mike, at some point, hopefully tonight. And if I don't get to you in the next 24 hours, email me, hugh@daytradespy.com, but I should get it to you, Mike. Not a problem. Okay. All right. Okay. A little confused again. Some of your videos, you say to place a 40% stop on the order, yet another places, such as the newsletters, you say not to place stops because the market makers make more money and you lose. Okay, you clarify. Okay, so, yeah, I know some contradictory information. In fact, a couple weeks ago, I think it was I had in my newsletter, I think it was entitled "Why I Don't Like Using Stops." So, as a seasoned trader, I do not like to use stops because let me just show you. Let me see if I can find something on that. Okay, to give you an example why I don't like to use stops. And I am going to try and find, hopefully I'll be able to find an example. So I'm going to look on this left chart here. Okay, this left chart. Okay, I'm just trying to find a left chart. Something is an example. Okay, this here is an example. Now this is after hours, so just watch the left chart here. Okay, the left chart. All right, so um, let's say now this is after hours, as it turns out, but it could be during hours as well. All right. So let's say you had some call options. I'm assuming you know what calls are. If you expect the market to go up, you buy a call option. If you expect it to go down, you buy a put option. But let's say you had a call option, you had a stop loss, a stop that if the stock drops to this yellow line here that I just put up, and I'm going to change something here. I'm going to just change this to a 4-pointer, save as default. Okay. So let's say the stock dropped to this point, your stop loss would take you out. Okay. Or this point, or this point, or anywhere along the line here, anywhere along the way here. Okay. Let's say your stop loss was something way down here that if the stock drops to this level here, it's going to take you out on a stop. Well, I got news for you, folks. The price is not down there. It's up here. It's between these two lines here, right? It's between these two lines here. These two, the price is up between these two blue lines. That's where the price really is. Okay, that's where the price is, right between these two blue lines, right? Somewhere in there. As an that, I'm obviously eyeballing it. But here's the thing: market makers and institutions and brokers, they can see your orders if you use a stop loss. They can see your orders, as the rest of the world can too. So let's say they see a bunch of orders way down here, right? Way down here, they say, "Oh, I think I'm going to," because market makers are charged with creating liquidity, right? They can execute trades for different prices. So they will execute a trade way down here, somewhere down here, to take out your stops, to take out your stop loss. They see all these people with stop losses along the way here. They can take out all these stops by executing trades way down here. Now, there's some programs that, well, if it's just a brief trade, just it says just ignore it, right? Just ignore it. So that's why these, like in this case here, they have executed a series of trades over the next little while to try to take out stops way down here. If your stop was anywhere along this line, you'd be taken out for a loss. You'd say to yourself, wait a second, the price is up here between these blue lines. Why am I getting only, only whatever the option is down at this level here? And then you call your broker and they say, oh, you had a stop, didn't you? And say, yes, I did. Yes, and that's why. That's why. Market makers saw your order. They took out your stops. Sorry about your luck, pal. That's what happens. Okay. So that's why I particularly do not like to use stops. I don't want to be taken out. And here's another thing. I'm sure many of you have perhaps witnessed this where you're taken out on a stop and then you continue watching it like it's still your trade. And 10 minutes later, the market turned around and would have given you a profit. And you say, oh, I wish I'd have stayed in it. Why did I drop out of it? Well, and that's what happens. So now, for the new people, they really get concerned and worried and all that. We have come up with a system that says, listen, if you are new and you're really concerned about, it's not that we don't manage our positions, we do, but maybe if you are new and you're really adamant about using a stop, then maybe put a 40% stop loss so you do preserve your capital and you're able to trade the next day. So for that reason, we do actually put it in there. So. Okay, so here's a couple questions here from Dev. Thank you very much. Number one, how much initial capital required to trade for someone who is completely new to options trading? All right, so what I would suggest there is, first of all, learn our system, join our trading room, and then do paper trades. Do about 20, 30, 40 good paper trades until you get very familiar and very comfortable with what we're doing, okay? After that, transition to real money starting small. You might want to stay small, say around 4 or 5 contracts to start. Okay, you're not going to get rich. Okay, you're going to buy lunch, maybe a dinner or something, but trade small until you get very comfortable with it. Build up your capital, and then edge it up. I like to start with say a couple $1,000s in trading. You don't want to start with say one contract. I don't think. I think that's a little too weak. You're going to spend a lot of time, chasing nickels and dimes and not being, really rewarded. I think most people, I don't know what most people trade. I'm guessing here they probably trade about 10 contracts. It may be more, maybe less. All right, so that's what I would do there. All right, so here's another question here. Since I'm based in Singapore, which has a 12-hour time difference, this trading of SPY will commence for me at 9:30 p.m. So I've got a full day job. How much time is required for me to trade SPY at night here? Do I need to monitor the trade the whole night? Thank you. Okay, so we like to trade in the morning. I like to just get my trade in and out pretty much within an hour, hour and a half tops. Usually we're done by 10:30. And more often than not, I'd like to just get in and get my trades done as soon as possible. Sometimes I'm done my trading day by 9:45 Eastern time, or in your case, Dev, 9:45 p.m. People laugh at that. I remember when I started, and I would look at those early morning trades. They say, "Oh, that's amateur hour. You can't trade that. That's amateur hour." As if that's a bad thing. And I'm thinking, well, first of all, I'm not a professional. Back in those days, I wasn't a professional. So, is there anything wrong with amateur hour? I don't know what they meant by that, but I can tell you that I make a lot of money on this thing that they call amateur hour, which is that first hour of the day. All right. We make a lot of money during that time because that's when you get a lot of movement A lot of volatility, a lot of moves. The options love to move during those, and you can really develop those patterns and though that first hour. So yes, that's when I like to make most of my money. So all right, and no, you should not have to monitor the rest of the day. Once you get your money, once you get your goal, get in, get out, go do whatever else that you want to do. Okay, thank you for that, Mary. Should thank God Lucy's okay. Thank you so much for that. Yes. Um, she can't really do stairs very well. Going back to my dog, she's a 120-pound Bernese Mountain Dog, 12 years old. Her legs are she's struggling with her legs, and I hate to say it, but it's going to be a very sad day when we have to wrap it up for her. Actually, I'm just 2 weeks ago, a friend of mine actually just put his 17-year-old dog down. In fact, a few of my friends have been doing this for the last couple of years, and I know Lucy's time is around the corner, so it's going to be a very, very tough day for us here. Um, she's been with us for 12 years, and she's part of the family. So anyway, thank you for that, Mary. I appreciate it. But we put her in a blanket, brought her up in a blanket, and and thank you there for that, dear Randy. Dear Randy, thank you. Thank God for Lucy. Thank you so much for that. Thanks for the comments on that. Um, yeah, you guys understand, you guys understand what that's all about if you have a pet like that. So, um, Mark, the pick of the day expired. Did it ever hit the profitable target? Pick of the day, I believe, was a profit on Friday, but it came up very fast. That would have been June the 7th. Okay, the pick of the day, you buy that right at the market open in the first 2 minutes. We have a buy price of 302 at 931 and a sell price of 405 at 934. Should have been in that trade no more than 3 minutes on the 533 puts for June the 14th. You should have been out of that. If you're still in it, let's see what happens Monday, okay? And I don't know why you should have. So as soon as you get it, immediately put up for sale for your profit target right away. And then we'll do that. So question here from Gerald. Do you calculate the 6% move from the actual opening price or from the bid-ask price? Okay, so what if you need to buy at a higher price? Okay, so what we do there is we take the average price between 930 and 931. So there are going to be some people who perhaps are going to buy for the higher price. Some people are going to buy for the lower price, but we're trying to be very fair about it. We used to take the high price all the time. And then our bosses at Eagle said, well, that's not really fair either. You're not being fair to yourself because you're going to get it for lesser than the high price. And we used to say things like, well, yeah, but we're trying to make it so very conservative and all this. But it's got to be fair. And he's in the and he sort of they said they not just he the whole committee said, listen, take the average price between 930 and 931. That is what most people are going to be somewhere around that price. Nobody's probably not too many people, if anybody's going to take the high or the low, but the average is somewhere in the middle. So that's what we're using as an average here. So all right, and let me go back to some more comments here. Do I think Friday's Nvidia stock split will move the markets? Ernie, good question. Okay, so we don't talk about other stocks, but every now and then we'll mention just something that might be a market moving kind of an event. And Nvidia, right, the chip maker, they had a 10-to-1 stock split on Friday after the market closed. Apparently, I don't know, I haven't checked the charts or anything, but usually, after a company splits its stock like that, what happens is it lowers the price, obviously. I think Nvidia is like a 900 and some dollars share stock. So not a lot of people can afford that, right? But when they bring the price down to say, $90 or $96 or something, more people can afford the stock and they get into the game. They start buying it, and by buying it, they're pushing demand up, and hence the price goes up. And that is why I'm thinking here that Nvidia could be hot. I think it's like a $3 trillion company now. I think it's just under Microsoft or something. Huge. What do you do with $3 trillion? Wow. Where do you park that cash? I don't know. But anyway. Okay, question. How could the sim account be different from the live account? Okay, so different data feeds on that, Bruce, the computer guy. different data feeds are going to give you different numbers. And sometimes you see that. See, I think the data goes down in packets. Of course, it happens so fast you don't see it, but it's little packets of data. And so if you get, if you're getting a little different, data on a SIM account, you might get some different numbers. Usually it's the same, but every now and then you're gonna get that. So, all right, okay, note on the Ultimate Training Workshop. Okay. Okay, let's see. The website says, for those of us who have access to recordings will be taken off the website. You might want to contact them on that to see how long you can get I think they're going to work on, I'm not sure, but I think they're going to work on keeping the recordings available. If you purchased the Ultimate Training Workshop already, you should have access to that for longer than July, but we're going to see what happens. Anyway, contact them if you have an issue with that. You still have some time on that. So, all right. Okay, concerning the trades you make in the trading room, are your trades more complex than level one newbies can use? Okay, so those trades that we do in the trading room, we narrate everything, we discuss everything, and we talk about, we talk about the setups, we talk about what we're doing. We really try and, for lack of a better word, dumb it down so that even the novices can understand what we're doing. That's kind of the objective here is to be safer. All right. Oftentimes, if I'm trading myself, I'll do more aggressive trades. But in the trading room itself, we're trying to show some nice, safer trades. Okay, so that everybody can make a little bit of money in the trading room. As you get better at it, you get a little more aggressive, you get a little more daring, a little more risky. You tend to make a little more money, a lot more money, and we get into that. But as a rule, we're trying to really be at the very basic level of safety first. Safety first in the trading room. Okay, being new, please clarify if we are to open the day trade uh, WIYHIN in the first 2 minutes. I'm sorry, I don't understand what WI. Friday opened 9:32, never got closed 106. You opened at 9:31, had a fill. Okay, I think that goes back to the pick of the day. Um, so again, if you get in for the average or lower, you should have been taken out. But you know what? Don't worry so much if you're still in that pick of the day, because as I mentioned earlier, the average what we've seen over the last 5 years. Let me go back to this slide again. I want to go back to this slide because I want to kind of go over this here. Okay, where did I go? This slide here. This slide here. Okay, this is here. The average over the next week we had over the last. Okay, so here's the way this works. This blue line up here at the top is SPY price today. The red line is a composite of the last 5 years closing price on the daily charts. So if we go back, what happened the last 5 years, you got an average drop of 9 points the following week. If the stock this week, behaves the way it did the last 5 years, we should, perhaps we'll see a stop, a drop in the coming weeks. So if the pick was the puts, you'll probably be okay. So don't worry too much about it. The last time I saw SPY, we actually had the futures were in a negative, and I'm going to see if that is the case right now. All right, let's see what happens here. SPY is in a negative $1 right now. That was higher or rather lower before, so higher negative. So we'll see what happens. All three indices right now are showing red, and so is gold. Okay, so I would say that the price will probably no, price will probably come down, and you've got a whole week for which the option price to come back into profit. Okay, should be okay there. So, okay, John M. tried calling let's see, Dr. Grant told me there are no specials on anything ever. Well, okay. Call again. Call again and see if you can get the 6.99 quarterly special on the trading room. I'm pretty confident you're going to get it. Okay. And let me know if you can't, and I'll see if I can pull some strings. All right. All right. Thank you for that, Jim S. Really? Wow. I'm going to give him a bell. He gets a bell for this. He said, Hugh, I made $20,000 in the last 5 weeks. You are fabulous. I've been able to help our family members, not to mention myself. Thank you. You have truly made a difference for me and my family. Looking forward to tomorrow. Thank you so much for that, Jim. You made $20,000 in the last 5 weeks. Nice to see that. Let's see. Okay. All right, Tom, would you consider scheduling an open house for 2 to 5 days so interested persons can experience what the trading room is really like? All the words in the world cannot replace live experience. That is true. Tom, I believe that once or twice a year, Eagle does have an open house on the trading room. I am going to actually write that down and talk about that in our next meeting, in our next marketing meeting, and to see when they're going to have their next open house for the trading room. I know we had that a while back, quite a while back now. Very well received. A lot of people stayed on, so it was really, really pretty good. So, but you know what? Here's the other thing I'm going to recommend. If you or call customer support or customer service at DayTradeSPY or phone the number 570-567-0426 and talk to somebody. Even if you have to pay for it, and if you don't like it in 30 days, you get your money back. So that's experiencing it. I know it's a bit of a pain, but if you can do that, so. Okay. Okay. I'm just trying to quickly scan some of these questions. I didn't want to go too much past 9 o'clock here tonight, but thank you for that, Bill. Glad your dog is safe and sound. She was in the bushes, and I think there might have been poison ivy in the bushes. I'm kind of hoping it's going to be okay there. There's some pretty prickly stuff going on there, and it was so thick you couldn't get her out. And I knew there's a ledge further down, and anyways, I remember, looking down at her, she looking up at me like, that look on her face, like, help me, Dad. I'm sorry I'm here, but I can't get up. And I don't have the strength in my feet, my legs to push me up. And oh my gosh, don't tell me this is just before the trading room. What was he going to do? There's another question here. What level trader do you need to be to use the kind of trades used in the trading room? Okay, Tom. So if you know what calls and puts are, you belong in the trading room. Okay, you belong in the trading room. And what I would suggest there is just follow along. All right, ask questions. We answer the questions, and we try to make it as basic and safe as possible. So we do get into a lot of sort of very basic type questions, and you should be okay. And after a while, you're going to pick it up, and you're going to do okay with it. So, all right. So another one here. Let's see. Okay. Okay. All right. So people that bought the ultimate training course get the spreadsheet. Okay. All right. Okay. On the left hand of the spreadsheet. I am going to see about some way to get this to all those people that bought the course. You have to have bought the course to get that spreadsheet. Okay. Robert. Okay. Hi, Hugh and Aaron. I just joined the pick of the day, and I'm learning from about different segments to the service. Okay. Okay. I work for a discount broker as a registered rep in Canada, and unfortunately, I can only trade on my breaks. Really? I can't enter trades as suggested at market opening. I'm tracking the trades to see how it would perform. I'll have to leave my job and use the service instead. I'm planning on tracking my trades before I make the decision to leave your corporate job. Leave the corporate job. How long do you suggest I track the trades before making my decision? Okay, here's a gentleman looking to leave his corporate job as a registered representative for a discount broker in Canada, and wonders how long he should track our system before leaving his job. Um, Only you can make that decision. I can tell you that when I was trading, I was still working as an internal auditor for an insurance company, and people would gather around my office computer to look at my trades and what I was doing. So we never actually started working until probably about 10, quarter after 10. Of course, I had to work overtime to make up for the loss, but you will know when it's time. When you're making more money on the side trading than you are working, and your heart's no longer in your job, you will know when it's time. But make sure you have a lot of data points in that before you make your decision. And I'm talking about I don't know. I would even go, months or even a year or something, a lot of time. You don't want to just leave your job and suddenly, oh my gosh, I have a week of good trades. That's not going to be enough. Okay, you want a lot of data points in there to make sure that you make the right decision. It's um, it's a lot easier to paper trade or check the data points than it is to go back and get your job back if you mess up, right? So um, I have a lot of trouble getting in when the market opens in the opposite directions of the morning pick. How do you handle that? Okay, so if you've got the pick, let's say it's a call. If when you see the pressure going to the upside right away, that 9:30, 9:31 spot, all right, jump right in then. Okay, jump in then. You don't have to wait for the candle to close, nothing like that. Just jump right in when you see the pressure going in your direction. Now, if the pick is a call and you see the pressure going to the downside, you're still going to buy the call, but wait until you start seeing the pressure on the 1 minute chart reverse go back up. You'll get your options a little bit cheaper. Okay. And that's what you want to do. You want to wait until pressure goes back up. And that might be 3 or 4 minutes down the line. Who knows when it's going to be. So, all right. No, we don't do spreads, no butterflies, no vertical spreads. Okay, that's great. I'm glad you asked that. We buy, we buy and sell in that order, calls and puts. No spreads, no naked positions, nothing like that. Okay, nothing like that at all. All right, so we buy first and then we sell in that order. Okay, all right, okay. All right, thanks for that. Okay, I think we're gonna call, okay, sort of hear about that. Rod, he's saying he let his boy go in the 18th year, toughest day of his life. Still grieve him 6 years later. Sent on my picture of the day of 3,000 images of including videos every day. He's talking about his dog. It's terrible, isn't it? Geez, I'm talking like she's already gone. I'm thinking here could be very, very soon. I don't know. It's not looking like a, so Bruce is asking for a timestamp inserted into the body of the signal. Okay, so when you get the signal, it does have a time. The time is when you receive it on your cell phone. Get it at that time. Um, we uh, they say there's a timestamp on it, and when I get my email, it's the time. So if the time is 9:51, that's the time, Bruce. Just get it right away. You should be okay with that. Let's see. Yes, trading level one refers to trading authority. As you just buy and sell individual options, that's good enough. So if you're looking for a particular level of trading, level one is all you need. All right, level one. So, and I understand trades are now settling within a day or something. Yes. Thank you for that, Bill. Okay. All right. So, huh. Yeah, maybe I think if you talk to customer service about getting that special price of $6.99, I'm pretty sure they should probably give it to you. Um, anyway, anyway, there's a lot of stuff here. And there's yes, the money back guarantee for the signal was 14 days. So you got to check that. Some was 14. I think the signal was 14 days. Pretty sure the trading room is like a month or something for the that period with which you can get your money back. So okay. All right. Listen, folks, I think with that we're gonna call it a night here. It is after 9 o'clock Eastern, and I don't want to keep you all night here, so we're going to wrap it up. The recording will be made available and on the website soon. So thanks for joining us. Been a pleasure. Good night, everybody.
Loud and clear, and there ain't no stopping now. You're the one, shine brighter than the moon and the sun. Be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you